Welcome back, friends, for one more update from the world of EV stocks. In case you're new to this channel, please do consider subscribing. And if you live in the United States, you can get 2 free shares worth up to $1,850 just by following the link in the description. Now enjoy the rest of the video.
Prices paid by U.S. consumers surged in June by the most since 2008, topping all forecasts, and testing the Federal Reserve's commitment to sticking with ultra-easy monetary support for the economy. The Consumer Price Index jumped 0.9% in June, and 5.4% from the same month last year, according to Labor Department data released Tuesday. Excluding the volatile food and energy components, the so-called core CPI rose 4.5% from June 2020, the largest advance since November 1991. Now, these can be extremely concerning developments for growth stocks such as NIO or XPeng in the short term. However, we've already seen major corrections in growth stocks this year on inflation fears. So, experts believe the worst might be already behind us for stocks like NIO and XPeng. At least for 2021. That said, one other thing that has been of major concern for the short-term prospects of NIO and XPeng is this false fear being spread through various forms of media about Chinese stocks. Many prominent YouTubers have recently published content claiming that NIO shares listed in New York Stock Exchange are fake shares, and they represent a fake shell company listed in Cayman Islands. We'd like to reiterate that most of the biggest banks and investment firms from Wall Street are heavily invested in NIO, and that would simply not be the case if the NIO shares were fake. The president of XPeng was recently asked to clarify on the current situation for a lot of these Chinese stocks, and if the government crackdown fears could actually impact the EV stocks.
Circle back to the listing, and in particular, just to sort of emphasize the point here, for U.S. investors, is there a message that you want to get across to them amidst the sell-off that we're seeing, of course, not just in XPeng, but in Chinese-based U.S.-listed companies broadly? Is there a message that you want to make sure American investors know about those U.S.-listed shares?
Yeah, I think one thing is maybe investor had to really look at the past and the longer horizon. I mean, Chinese ADRs has been one of the best better performing classes of security if you look at 10 years or beyond. So it has provided significant growth and opportunities for US investors. But also along the way, there has been quite a bit of volatilities. And, in years like 2012, in years, there are, similar issues have impacted the shares trading in the US. But in the long run, I think because China growth opportunity is still very compelling, I think investors, if you take a longer term view, will be very, very much rewarded.